The sluggish stock market is expected to perk up today amid high volatility. Wall Street is going to regain some optimism. Investors are checking not only the economic calendar but also anticipating the long-awaited IPO. Following mixed inflation data, the benchmark stock indexes closed also mixed yesterday. The Dow Jones showed the worst performance and closed 0.2% down. The Nasdaq managed to gain 0.29% intraday, and the S&P500 inched up by 0.12% to close at 4,467 points. The major stock indexes traded quietly without a common dynamic in the New York pre-market. Futures on the stock indexes received a fresh impetus before the opening bell. The S&P 500 is expected to trade in the intraday corridor between 4,450 and 4,510 points. The S&P and the Nasdaq closed in the green on Wednesday because the inflation data showed moderate growth of consumer prices in August and cemented expectations that the Federal Reserve will maintain the funds rate at the current level in September. The Labor Department reported that consumer prices accelerated in August at the fastest pace in 14 months, mainly due to a jump in gasoline prices. At the same time, the annual rate of the core CPI was the lowest in the last 2 years. Following the report, the market has upgraded the chance of the Fed status quo in September to 97%. Besides, the consensus suggests that the chance of the Fed's pause in November is 61%. In this context, mega-cap stocks such as Tesla, Meta, Microsoft and Amazon each rose by more than 1%. However, Apple's rough patch continued on Wednesday, and the company's stock fell by 1.2% for the second day in a row, following the presentation of new iPhones on Tuesday. Elsewhere, in the corporate sector, Ford Motors shares climbed by 1.5% amid the automaker's plans to double the production of hybrid F-150 pickups in 2024. Citigroup shares went up by 1.7% after CEO Jane Fraser announced a major management reshuffle which will end up in significant job cuts and give her direct control over the bank. Moderna shares added 3.2% after the pharmaceutical manufacturer stated that its new flu vaccine achieved its primary goal in a late-stage study. By Thursday, futures on the benchmark indexes were gearing up for an upward opening. The focus shifted to data on producer prices, retail sales, and unemployment claims, and the tech sector and the AI funds were eagerly awaiting the long-anticipated debut of ARM holdings in the stock market. The economic reports showed stronger than expected figures, arousing concerns about stubborn inflation. In turn, this reinforced the belief that the Federal Reserve is likely to keep interest rates elevated for a longer period. Producer prices grew by 0.7% in August, and the highest score since June 2022. The figure surpassed the consensus of a 0.4% increase, and the PPI for consumer goods climbed by 2%, driven by a surge in electricity prices over 10.5%. Excluding volatile components such as food and energy prices, the core PPI slowed down to 0.2% following a growth of 0.4% in the previous months. The annual factory inflation reached 1.6%, the fastest pace in 4 months. Retail sales expanded more than expected in August thanks to rising gasoline prices. Retail sales rose by 0.6%, a 0.1% uptick from a 0.5% increase in July. The actual reading is much stronger than the expected 0.2%. The report proves robust consumer spending despite high inflation and borrowing costs. Excluding cars, gasoline, building materials and food services, retail sales edged up by 0.1%. Investors are worried by a weekly update on unemployment claims. The first-time claims for unemployment benefits rose to 220,000 last week from 217,000 a week ago. The actual increase was lower than the expected 225,000 claims. All in all, the batch of fresh data indicates persistent inflationary pressure and the robust labor market. Nevertheless, traders are certain about the Fed's pause in rate hikes, which will be announced next week. The market also believes that the central bank will signal the end of monetary tightening, though interest rates could remain at elevated levels for a long time. The reason for such expectations could be the focus on the rising energy prices and relatively stable core CPI and PPI, which exclude volatile components. However, in the long run, growing fuel prices could affect the cost of goods and consequently consumer demand, which might give the Federal Reserve a bit of a headache. In the corporate world, on Thursday, optimism regarding AI and companies involved in chip manufacturing once again took center stage. ARM Holdings shares are debuting on a Nasdaq today after the chip designer valued its offering at $54.5 billion, priced at $51 per share on Wednesday. Against this backdrop, shares of chip manufacturers, including NVIDIA, Micron Technology and Advanced Micro Devices, added between 0.5% and 1.7% before the opening bell. HP shares fell by 3.9% after Warren Buffett's Berkshire Hathaway sold approximately 5.5 million shares of the company. Visa shares dropped by 2.3% after the payment processing giant stated that it's working with the Class B shareholders on an offer to convert the shares to Class C or Class A. The currency market is riveted to the ECB policy meeting today. Following the meeting, the euro lost ground and the US dollar index jumped above 105 points. It was trading at 105.20 in the New York pre-market and 0.42% up. The intraday CAD for the index is seen between 104.70 and 105.40. The ECB raised the refinancing rate by another 25 basis points, and the regulator dropped a hint that the 10th rate hike in a row could be followed by a pause. Based on its current assessment, the Governing Council believes that the ECB's key interest rates have reached a level that, if maintained for an extended period of time, is likely to ensure a timely return of inflation to its target level, the statement reads. So the euro shed more than 0.6% in value, while the US dollar index, fueled by domestic macroeconomic statistics, managed to break beyond 105 points, maintaining its advantage and excellent bullish prospects. The Canadian dollar is advancing at a moderate pace, and the USD CAD pair is trading at around 1.3538 and 0.09% down. The instrument is likely to trade in the intraday CAD between 1.3500 and 1.3575. Despite a rally of the US dollar, the loonie found support from oil prices. Crude market quotes recovered today after a decline in the previous session. Both benchmark rates conquered a 10-month peak on a Wednesday before the report showed an unexpected increase in the U.S. oil inventories. Crude stocks expanded by 4 million barrels last week, defying expectations of a decline by 1.9 million barrels. gasoline inventories also grew more than expected. And today, markets have again turned their attention to the tighter oil supply outlook until the end of 2023. Against this background, Brent oil futures rose by 1.4% to $93.38 per barrel. The crypto market eventually woke up, trying to get rid of a sudden pressure. Bitcoin gained another 1.3% today to trade at $26,580. Popular altcoins are also trading higher, grew by 0.4% and 2.5%. Cryptocurrency news as usual concerns the industry's confrontation with the regulator. And today it became known that there was a minor disagreement within the SEC over classifying NFTs as investment contracts. The U.S. Securities and Exchange Commission accused Stoner Cats 2 of selling unregistered investment contracts under the guise of NFTs. Today, two commissioners spoke out against this decision. They stated that from a legal standpoint, selling NFTs is no different than crowdfunding through the sale of collectible items. The crypto market seemed to revive today, and the underlying reasons could be the disagreements within the Commission or favorable technical conditions for breaking out of the flat trend. As for the intraday outlook for Bitcoin, if the asset can cross $26,750, it might very well make a run for the landmark level of 27,000, and the alternative scenario suggests a drop to 26,200 and further to 25,800. Watch our video on the InstaForex TV channel to make wise trading decisions. Welcome to leave your comments and ask any questions, and see you online tomorrow.